where I get my $3,500 target. If you compare the dot-com era to the last couple of years in crypto, where you saw Dogecoin and SHIB and I mean these crazy meme coins, and some of these coins going up thousands and thousands and thousands of percent. If that was the equivalent of what happened in the dot-com era, and Amazon in the dot-com era collapsed 95% before going up tens of thousands of percentage points, then you have to think maybe a 95% correction in Bitcoin could occur, in which case you're looking at 3,500.
Bitcoin, the world's largest cryptocurrency, spent most of the past week below $20,000, which a few weeks ago seemed like a great support level for the crypto asset. But one analyst believes prices could fall even lower to $12,000 or even $3,500. This is a sentiment that popular technical analyst Gareth Soloway has shared in numerous interviews and tweets since late last year when Bitcoin hit its current all-time high. While many other on-chain and independent analysts were predicting higher prices for Bitcoin and other crypto assets, Soloway, the president and CFO of InTheMoneyStocks.com, insisted that prices were going lower. The technical analyst explained that the U.S. Federal Reserve and other central banks spent 2 years pumping trillions of dollars into the economy during the pandemic. But the false liquidity is now being sucked out of the markets to slow inflation and cool down the heated global economy. In a recent interview, Soloway explains that asset prices from stocks to crypto and real estate still have to drop lower before they can return to their original pre-pandemic states. According to Soloway, that would mean another $6,000 to $9,000 drop in Bitcoin prices. But the technical analyst believes the asset could go even lower to $3,500 if the crypto bubble burst behaves similarly to the dot-com bubble. We will now take you to Gareth Soloway's interview as the renowned technical analyst discusses his prediction for Bitcoin, Ether, the stock market, and his general macro outlook. Before we get into the video, please take a little time to hit the like button, subscribe to the channel, and turn on post notifications so you never miss any of our regular uploads. Also, ensure you drop your comments and observations in the comments section below. Thanks and enjoy the video.
Okay, so right now, crypto getting a little bit of a bid as the dollar has fallen. Per the chart, we're in this bigger wedge pattern. So again, if I zoom out, this is pretty remarkable wedge pattern where you basically had the all-time high down sloping trend line. If we can break above that, it gives you a little bit of a short-term short squeeze on Bitcoin. Overall, I don't see it lasting for very long, and I ultimately see more downside. Right now, my high-end target on Bitcoin is around the 12 to 13,000 level, which would put us right down here at this pivot. Right now, we're still hovering around that 2017 all-time high before the last bear market. But I do think eventually it gets pushed below this level and collapses down to, again, 12 to 13,000. I know a lot of people have heard the headline of, like, Gareth says it could go as low as 3,500. That's kind of a worst-case scenario for me, where if we really see, the financial markets collapse. We know that Bitcoin kind of follows the financial markets. It hasn't become a kind of a goldish type thing yet. Then you could be looking at a $3,500 target. Long term, I love Bitcoin. I think there's a huge place in the economy, in the global economy for it. But again, cycles are cycles, and we can't deny the fact that, number one, we're in a bear cycle. Number two, this is the first bear cycle that you haven't had Fed printing of money, which means it probably is going to be a worse bear cycle than past bear cycles, and we haven't even corrected 80% yet, which is what the past cycles did. So you have to kind of take that into kind of analysis. Where I get my $3,500 target, if you compare the dot-com era to the last couple of years in crypto, where you saw Dogecoin and SHIB and I mean these crazy meme coins, and some of these coins going up thousands and thousands and thousands of percent. If that was the equivalent of what happened in the dot-com era, and Amazon in the dot-com era collapsed 95% before going up tens of thousands of percentage points, then you have to think maybe a 95% correction in Bitcoin could occur, in which case you're looking at 3,500. But I think you have to kind of keep in mind that this could be a bearish pattern. If we go to the parallel channel, right, we put a trend line below these lows here, and we drag this up, you basically are creating this. And so when I'm talking about maybe a breakout from here, you probably would head as high as this level here, which is around 25,000, but you're still in a sideways channel, which from this drop, or you could look at a bigger drop, it's still bearish as of now. It hasn't flipped to bullish yet on Bitcoin. There's two things that tells you. First of all, the stock market has been more volatile than Bitcoin. I never thought I'd say that, but that's been the case. And then number two is that this quiet periods are the periods before big moves. So you know something big is coming. Think about the eye of a storm where it's very quiet, but then when you come out of the eye of the storm, it gets real crazy. So at some point, something is going to trigger here, either a big move up or a big move down. A little bit on Ethereum. I'm more of a swing trader on Ethereum at this point. But yeah, I mean, Ethereum, it's still well above these lows from June. It looks like it held this retrace. And this is just a great example of technicals where you had this, you can see pivot high, pulled back, broke out. And we know that when you break out, charts tend to want to come back to home base. Where was that breakout? Well, guess what? It was right there. It came right there and has kind of held up relatively well. Now, if we rally up, this downsloping trend line becomes the resistance point. Now, with the merge, I mean, it's kind of been a little bit of a crazier analysis point on the merge, but right now, again, you're holding support on Ethereum, and it wouldn't shock me to see us go up and test this trend line up here.
Before the bear market ends, however, he says we could get a brief bear market rally to $25,000. He also clarifies that the bear market will be layered. According to the technical analyst, the first stage is the record high inflation and quantitative tightening we have now. Next comes a global recession that sucks more liquidity out of the markets. In fact, Soloway believes that the bear markets might last for several years. Let us know your thoughts about his price prediction for Bitcoin and Ether in the comments section below. Let's return to Soloway's interview as he discusses his worst case and best case macro outlook.
I do think that we are headed into a global recession, but remember that recessions don't, the markets don't trade in a straight line. So you're going to get to these technical levels where people get overly bearish, and then you get these technical bounces, like, for instance, when the Bank of England does something like this. And then what you'll see is people start to sway and start to get bullish again. And then as soon as they start getting bullish in a bear market, you have to be on alert that it's likely not going to go too much further. So I don't think, for instance, a one-day bounce is all we're going to get here, but I certainly do think we are going to go lower across the board on all stock markets and really start to head lower. I'm kind of isolating down, and I can show my S&P chart here.
Sure.
SPX. There's a pivot point that I'm watching. So number one, notice where we bounced today. We bounced right at the lows from June. So a technical support level right there. I think this is a short-lived bounce. You might get a week, week and a half, 2 weeks out of it. But ultimately, we have to go retest the pre-COVID collapse highs right here. So that's down around 3370 on the S&P 500. And that makes a lot of sense, right? If you think about the Federal Reserve sucking all this liquidity out of the market, it makes sense that we have to go back to the pre-period before all this liquidity was put into the market. So that would be my next stopping point. I think by year end, we get there. I also think on a basis, I'm going to be looking to buy this level right here just because it is such a psychologically technical level right there. So there'll be a bounce off of that. But again, I'm in the camp where you're going to have two cycles to this bear market. The first cycle we're in right now, which is a cycle where the Fed is tightening, there's no more money printing, and so valuations have to come down. The second cycle is going to be after the Fed pivots, right? So the Fed is going to eventually pivot. We saw kind of the Bank of England already do that, right? So at that point, you're going to see a big bounce in the market because the Fed is pivoted. Everyone's going to say, oh, they're going back to easy money policy. I don't agree with that. I think the pivot is basically just not hiking rates anymore. And the next cycle is going to be when the economy slips into a recession, and that without Fed printing of money, if you think back to every past big market drop, whether it's a recession or it was COVID or whatever, the Fed has been printing us out. And so with inflation still staying above 4%, I have a long-term horizon of like multiple years where inflation is going to be 4% or so. The Fed cannot print us out of the next recession, and the market is eventually going to realize that. And that's going to be a big earth-shattering factor for the overall market, where they're like, wait a minute, how does the economy get out of this recession without the help of the Fed? And that's where you see that next leg down where people say, okay, now we could be in a recession for years. I mean, it could be a multi-year recession, not just a 6 or 12-month recession period. And we don't want to be all doom and gloom. We want to look at all sides. A good trader, a good investor always looks at the bad and the good side, and then kind of decides which one. And that, by the way, that helps you with risk management as well, to understand, if you're going short, you have to know what's the opposite, and vice versa on the long side. So I think for me, if we saw the Fed somehow engineer a soft landing and the global central banks kind of in Europe figure out how to get their economies to at least come back to a little bit of growth. That would be the best case. I also think you have to get inflation down. So far, we haven't seen it come down. I do expect it to start to moderate quite a bit, but I still am struggling with figuring out how it's going back below 2%. And then lastly, I think you look at scenarios like if the war in Ukraine were to somehow end and things were to improve dramatically there, the gas supply is resupplying to Europe. You have a lot of scenarios for growth and a reemergence of the economy, at least over in that area of the world. So there are positives. It looks bleak right now, but I think the big thing is for you and me, we follow the charts, and the charts should guide us. I mean, the beautiful thing about it is we should see in the charts that some of these positives may come out.
Do you think we could get a multi-year bear market as Gareth Soloway predicts? What is your outlook for Bitcoin, Ether, and the global economy within the next 2 to 3 years? Do you think we hit a new low with these assets or move into a bull market with a potential Fed pivot? Let us know what you think in the comments section below. Also, be sure you hit the like button, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.